Good afternoon, traders and investors. Will back here with another one, coming to you with a Sunday night video, guys. And it's that time of the week again where we go over the top 5 options plays for the upcoming week. Now, keep in mind, guys, all of these options plays are going to be for selling options, more specifically for selling put options as part of the larger wheel trade strategy that we run on the channel. It's a very easy strategy to run, whether you're a beginner, intermediate, or even advanced investor. Extremely passive strategy, does not require a lot of screen time and also a decent amount of ROI in relation to the risk that we're taking. So in today's video, guys, we're going to go over a few things together. Number one, we're going to go over a few of the strategy rules very quickly. Second, we're going to go over the top 5 options plays of last week and see how those went. And lastly, take a look at this week's top 5 options plays. And true to my fashion, guys, I always have some bonus plays for you. So those will be included at the end of the video. And we will give a few glimpses into some earnings play strategy for NVDA this upcoming week too. So without further ado, guys, let's jump right into today's action. So in terms of what we are expecting for the week, right? A little bit of weekly prep. Well, we obviously know that the bulls have been in full control of these markets now ever since the bounce started roughly 2.5 weeks ago. However, we are now getting very close to the all-time highs, guys. And I need to remind you, the recession narrative is not out of the pipeline just yet. So keep in mind, guys, in my humble opinion, even though the bulls look very strong right now, I don't believe it is a good value proposition to be going all in and going YOLO at the all-time highs right now for the breakout, especially in the midst of a potential soft landing narrative, right? Markets can throw us for a little bit of a curveball and can be very volatile. So we need to still be cautious, even though we are optimistic and still bullish in these markets for the time being, need to exert some caution right now, right? So moving on in, guys, the SPY looking very good. In the event we do get a little bit of drawdown right here, probably just looking for a daily higher low for possible further trend continuation. I will be on the watch for any dips over the course of this week, guys, because it will open up a lot of trading opportunities, especially for the ones that I'm going to feature in today's video. So in terms of the news events that could impact the market this week, we don't really have a tremendous amount before Thursday. Thursday is going to be a really big day where we get the GDP numbers. Obviously, a lot of focus right now is on the jobs market and the economy. So this is going to be one of the most important releases of the entire week. If it comes in lower than the expectation, it depends how much. Extremely lower than the expectation, the market will not like that. A little bit under the expectation, the market can get away with that as well. And then as well, on Friday, we have PCE, another inflation report that is supposed to come in quite light, guys. I would be very surprised if this has a large market impact, except if it is very high to the upside, right? So keep that in mind for your macro news events over the course of the week. In terms of earnings, guys, we do have a lot of earnings, but most of those really start on the Wednesday session. Wednesday is going to be very big with companies like NVIDIA, CrowdStrike, Salesforce, which can kind of move the market on their own in their respective industries. But NVIDIA is definitely going to be the market moving catalyst for the week. So essentially, guys, Monday and Tuesday should be clear sailing for earnings and for your general macro. Just be a little bit careful entering into the Wednesday session after hours with NVIDIA, and then obviously GDP on Thursday and inflation report on Friday. So with that out of the way, guys, now let's jump into a few strategy rules real quick. And we're going to be going over these very quickly. If you haven't seen, guys, I have a 30-minute video on the strategy, how I pick my stocks, how I pick my strikes, and explaining all of these rules a lot more in detail. If you haven't seen that video, I'll leave it top right corner of the video right now and also down below in the video description. So feel free to watch that if you want a more in-depth explanation of the strategy. So the put wheel, guys, if you don't know what selling a put is, it's very simple. Think of it as a buy limit order that pays you. So traditionally, when you want to buy 100 shares of a stock under the market, a lot of people place buy limit orders. The problem is if the market never pulls down there and just runs away, well, you don't really get anything. You don't get the shares and you also don't get paid. That is where selling puts comes in. Take a look right here. Very quick example. If we want to buy some Google shares down here at 162.50, well, this is pretty much a buy limit order. We can sell this put right here at 162.50 if the stock and collect $55 in that process. If the stock drops below 162.50, we will buy those 100 shares as we were planning to do anyways, and we will also collect $55, which reduces our average cost by $55 per share. However, if the market stays above this price point, well, we don't have to buy any shares and we just keep all of the $55. That is why I say it's like a buy limit order that pays you. Extremely simple strategy. So let's move on into the rule structure, right? Number one, guys, and this is rule number one for a reason, never sell any puts on companies you do not want to own at the strike price if you do not want to own it at that strike price. It sounds very obvious, guys, but a lot of people get seduced by large premiums on stocks that they don't truly believe in, and when they get assigned and if they end up in a losing position, they start to question why they entered the trade into the first place. So rule number one, guys, only ever write puts on a company that is extremely high conviction company for you, and you need to want to own or not mind being assigned the shares at that strike price. Rule number two, we want to be looking for companies in a monthly uptrend or a long-term range. A monthly uptrend is exactly like the SPY, right? When we know we're in a long-term uptrend or at least somewhat of a longer-term consolidation range down here, we know that the longer-term bulls are supporting us with that trade and are most likely to buy those dips. So you want to stay in the direction of your longer term trend because your longer term bulls will be in control, and we usually can get some very nice bounces out of support levels. Number three, no earnings this week, guys. This is a key factor. You may see me play earnings on the channel in my daily market recap videos, guys, but I never recommend playing earnings to anybody. Obviously, this video is not financial advice in the first place. However, guys, be extremely cautious if you are playing earnings. Obviously, you know it can go either way. We've seen so many companies over the course of this year that have decent earnings, but their stock price goes down 10-15%, and you may just get trapped. So if you want to stay safe, just do not play any short puts on companies that have earnings this week. Largely, guys, it is not worth it unless you understand the risks. Now, number four, we want to be writing puts on stocks at areas of support or a breakout retest. I always bring out this chart, guys. Autodesk, right? A support area, very obviously, is this large location of support down here. Usually always a good proposition to write puts in a large area of weekly support. And a breakout retest trade here, guys, well, you see it right here, right? Long-term range. Then we get a break, retest at the top of the range, and run. This is what's known as the breakout, retest, and run trade. This retest location is usually a very high probability trade. So any of the trades that you see me post for top 5 options will respect one of these two criterias, guys. Now, number 5, we want to be writing at or lower than the expected move, and we want to be writing on a red or flat day. These two things go pretty much hand in hand. So writing at or lower than expected move. If you do not know what an expected move is, guys, you can always go to this free website right here, optionsai.com. You don't need to subscribe or become a member or anything. It's a free service, right? So you can go here and see what Wall Street is saying that the expected move on a stock is going to be for the week upcoming, for the upside and the downside. We want to focus on the bottom side target because we want to be writing puts under this level. So it stands to argue if we are trying to write at or lower than expected move, well, we need to combine that with writing on a red or a flat day, because obviously if the stock price starts moving down into our expected move, it frees up strikes even lower and lower than the expected move. And usually if you get too close or lower than the expected move before the week is finished, you tend to get some mean reversion price action, which brings us back up within this expected band of pricing, right? So we want to be making the most of those two rules, moving hand in hand. Now, moving on further here, guys, we want to be writing, this is the ROI rule. So we want to be writing premium between 0.5% and 0.75% in weekly premium. Essentially what that means here, guys, is if we go to Google stock, right? We want to be, if we're targeting the 162.50 for this trade to be worth it for us, guys, we need to see 0.5% on the bid right here. If you don't know how to calculate 0.5%, a very quick mental math rule is just divide the strike price by 2, and you should see those cent increments right here. So 162.50 divided by 2 is roughly 81. So you need to see about 80 cents right here on the bid for it to be worth it. And if you want me to do the math right in front of you so you know it makes sense, right? If we get 80 cents and we divide that by our 162 strike, 162, we get roughly about 0.5%, right? This is our ROI. This is really the art form of this strategy. And it's really after years and years of running the strategy, guys, this is what's known as my sweet spot. It provides a very decent margin of error, right? In terms of amount that you can run, that the stock can go down without being assigned while still providing decent ROI. So very good trade-off between ROI and risk of assignment, right? That is the art form of running the strategy. You need to be mindful of those two things, right? So moving on further here, guys, we want to be taking profit at 90% of the contract value. The beautiful part of this strategy, guys, is that it's so passive and doesn't require a lot of time. You put on the trades on a Monday or Tuesday session, and then you pretty much let the time decay do the rest. The reason we set a take profit at 90% of the contract value, guys, is in the event that your contract goes almost worthless, you have a ton of profits, then the stock after that could decline and you could start round tripping a little bit of your gains. So make sure that we take our gains. Reason number two, guys, is because we can then use that same buying power. If we close the contract early, let's say on a Tuesday afternoon or Wednesday morning, we can go shopping for a different contract to make the most of that capital for the remainder of the week. Now, in the event we get assigned, guys, if ever we have to buy the shares at the strike price, well, then we're going to be writing covered calls. So writing puts is a way to get into the stock. We're buying into the stock at a support level, and then to get out of the stock, we write covered calls, which is basically like a sell limit order above the market. We want to be using the same rules for covered call premiums, targeting between 0.5% and 1% in weekly premium, and we want to be writing at the assigned strike price or one strike higher. The only time I will be writing one strike higher, guys, is in the event, let's say we get assigned on Google at 162 this Friday, right? And then let's say the Monday after Google gaps up to 165. Well, then that's the only time that I may just get greedy and write one strike above when the stock gaps up the following Monday or Tuesday after that. So very easy rules to follow here, guys. Now that's out of the way. Let's get right into the top 5 options plays of last week, and they all performed very, very well. So trade number 1 was OXY. We were looking for OXY premium right around the $56 mark. And I'm happy to say, guys, that was definitely unlocked at the Tuesday trading session. You can see us pulling down here into the low 56s. That freed up a couple different strikes. Not only did it free up the $56 strike, but it also even freed up the $55 strike. So we were looking for one of these two. And if you would have taken any one of these two trades, you would have ended up 100% profitable because OXY closed netly above both of those levels. So great reaction to a very large support area. I like this trade and it played out beautifully. Took it in my own account and I showcased that on the live account last week. Now moving into the second stock we were looking at, guys, it was Google. So Google, we were looking for Google anywhere down below here in the 160 to about 157.5. Now when we filmed the video, guys, it was after the last Friday session. So we were looking for a Monday or Tuesday retracement down below here and open up these lower strikes. Unfortunately, it did not happen much before the Thursday session. Monday and Tuesday were largely to the upside. Wednesday was flat. And then Thursday, we pulled down into it. I took this trade myself with a 1-day time horizon here. I went with a little bit higher strike just to get that premium before the Friday session. But in terms of the trades we were looking for on the top 5 options play video last week, 160 or 157, unfortunately, they did not work out, guys. The market did not pull back in our favor. So there was no trade to be made there as a whole, unless you followed me at the very end of the week. So moving on down, the next trade we were looking for here, guys, was Airbnb. So Airbnb, we were looking for anything under the expected move last week, which was 113. I was preferring the 112 down to about 110. This little sweet spot right here coming into our very large area of support between 110 and roughly 100. So this was the trade location we were looking for. But unfortunately, guys, Airbnb on the Monday and Tuesday kind of closed higher than the Friday after which we filmed the video, right? So there was no trade for a large part of the week, right? Airbnb was roughly flat and we wanted to get premium down here. There was not much premium available on those contracts below 113. However, at the tail end of the week on the Thursday session, I was able to trade one contract of Airbnb at the 113 strike, and those proved to be very, very good. Now, of course, they didn't open up early on in the week, which is what we had the desired outcome, right? But later on in the week, guys, if you're able to follow me, this still was a decent trade. So early on in the week, no trade, unfortunately. The idea was good. It unlocked later on in the week here, guys. But if none of you took it, I completely understand. So bit of a no trade scenario for that one as well. But, you know, didn't lose any money on this position either. Now, trades number 4 and 5 we were looking for, guys, was a pair of semiconductor trades. We were looking for AMD. So number 1, AMD, guys, where we were looking for last week, we were looking for AMD in the maybe 142 down to about 140 region, where we start this larger form area of support in this big green box. So Moving on in, guys, unfortunately, this one as well. No real trade to be had Monday, Tuesday, or Wednesday. You can see, guys, the stock just literally moved up the early portion of the week, so we are not in the business of chasing these trades. The idea was good, looking for a potential pullback and run, but the market chose the other scenario in which it ran to resistance right away. And now we're seeing the pullback. So there was no trade opportunity on AMD, but we will be looking for closely on this one this week. So once again, no trade on this one. The idea was good. It's just the market did not pull back in our direction early on in the week to unlock that trade. Now, the other part of the semiconductor trade was NVDA. So NVDA, we were looking for pretty much the same concept, right? So we filmed this video after the Friday session, 2 Fridays ago at this point, and we were looking for a little bit of a pullback here into our big box of support, 119 down to 115. However, it did not happen. Monday was a gap up session, and then Tuesday and Wednesday we kind of remained flat. I was looking for the dip into here, guys, and we were looking for strikes pretty much below the 113 down to about 110 level. It did not unlock, unfortunately. So even though the idea was good on this one, the stock just moved away from us, guys. And this is okay, right? We've now seen 3 trades that the ideas have been good, but the stock just moved away from us. That's okay, guys, as long as we're identifying the best possible opportunities and staying conservative and respecting our rules of only waiting for pullbacks and waiting for large areas of support. We are trading the strategy correctly. That's why I give you guys as well so many other bonus plays. There was a ton of plays open last week. Unfortunately, the safer ones in the top 5, we now have 3 of them that did not open up any opportunities, but at least we did not chase the market. I wrote some options on NVIDIA down here in the 114 as of the Thursday session. I showed that live, but I cannot blame you guys if you did not take this one later on in the week. The trade was really for the Monday and Tuesday session. Now, lastly, the one we were looking for here, guys, was Chipotle. Now, this one did open up, guys. So Chipotle, we were looking for pretty much strikes in the lower $50 range, exactly at $50 or the 49.50s. Now, happy to say, guys, that on the Monday or Tuesday session, we did have a nice little dip. When the stock pulled down here in the lower 52s and higher 51s, we did get some decent premium on the $50 strike. A little bit short, however, of being able to write the 49.50s. So the 50 strike was available, and if you ever went with that call, well, we would have made decent profit here, guys, as Chipotle ended largely above the $50 strike. So that would have been one that ended up entirely in our pockets. So that's pretty much everything for the last week's top 5 options trades. Hopefully you guys enjoyed that recap. Now let's jump into this week's top 5 options plays, and you will see, guys, most of all of them are recurring. Why? Because they're still within the ranges that we want to be writing these options on. So number 1 is going to be OXY again. The expected move for OXY, guys, is 56.19 to the downside. If you don't know what OXY is, it is a petroleum company, one of the best in the game, and is one of only 2 petroleum companies that Warren Buffett owns. It does pay a somewhat decent dividend here, but the reason I like it is this massive 2 years worth of support levels at the $56, $55 level. Fundamentals of the company are very, very good right now. So similar as to last week's strategy, guys, we're going to be targeting the $56 and maybe even $55 strikes. So let's go have a look, guys. Can we find some premium on OXY in the $56 to $55 range? Let's have a look together, shall we? So moving on into it. OXY, let's have a look. So $56, we need to see at least 28 cents on the bid for this trade to be worth it for us. 28 cents would be 0.5%. Once again, mental math, guys, 56 divided by 2 is 28. We need to see 28 cents on the bid for our 0.5% rule. Now, it's not quite giving it to us. So essentially what we're going to need to see in the early portion of the week to free up this trade is a slight little dip opportunity on OXY. If we revisit maybe the mid $56 level, that will undoubtedly free up the $56 strikes. And if we get close to, let's say OXY has a really bad day on a Monday or Tuesday, and we pull into the below 56 right away, that'll probably free up the $55 strike. So I like one of these two, guys, 56 down to $55. Love it because it's in this overall area of support. And obviously, you know me by now, guys, the best thing you can do with this strategy is be dynamic with your strikes. Meaning, if on a Monday or Tuesday session, OXY has a minus 3-4% day and immediately opens up at the 55s, are we going to be going for the $55 strikes or the in the money 56s just because that's what I said on the channel? No, we have to adjust to the downside. The trick is to be getting as low as possible into this area of support while still getting our 0.5% rule, guys. So always be able to adjust your strikes to the downside if ever there's some large unexpected expected moves on a Monday or Tuesday, and it's still within our area of support. So that's it for trade number 1. Trade number 2 is also going to be a trade that was from last week, and that is once again going to be Google. I really like Google here, guys, down below here, 160 down to about 157. I love this range. Yes, we are in a nice little daily uptrend here, but in the event the markets have a little bit of a pullback early on in the week, that may free up some opportunities in the lower range right here around this 200 daily moving average. And even if we get a sign, guys, on Google, well, number one, it's Google. Nobody should really be nervous about being a sign on Google, in my humble opinion. But thereafter, guys, the drawdown would not be so bad. If ever we get assigned in the maybe 160, 157 level, our maximum drawdown, in my opinion, is all the way down here, about $150. So it's not as if we're risking too much money before a very large area of support comes and helps us out, right? So moving into Google, the expected move is about 163.51. Let's have a look together if we can find some premium on Google's options chain below that 163.51. So 163 and better. And you'll notice, guys, that Google only trades in $2.50 increments. There's no 163 or 161 strikes, only $2.50 increments, right? So meaning we want to be under the expected move. So it means we have to go for the 162.5s or the 160s. As you can see, there is not enough premium here just yet. You would need to see at least 80 cents for this trade to be worth it for us. So not yet enough premium. So that being said, we need to see a little bit of a dip on Google here early on in the week to free up this trade for us, right? Now, if we can see a dip on Google down into the expected move, think maybe 165, 164s, that will definitely free up the premium here, guys, on the 162.50s. And if for ever its reason Google gets hit with a legal headline, Department of Justice, or other bad news on a Monday or Tuesday, and we see a big red day on Google here, think of maybe, 2.5%, 3%, which brings us down into the 162 right away. Well, that is when you're going to get up some freed premium up here on the $160 strike. So for me, it's going to be a moving target, either the 162.50s or the $160 strike for this week. So hopefully that was educational. Now, trade number 3, because it also still respects our support line areas, right, is going to be Airbnb. Airbnb, once again, love this range right here, 110 down to 100. Very good value for this company, in my humble opinion. Company is growing fantastically, and we went over their earnings when they had them, guys. Their earnings were quite good. It's just that they did hint at a little bit of a slowdown in travel demand, the same thing that Booking.com had hinted at as well. I would not be too nervous, though, because we are getting very good value down here for our money. So the expected move for Airbnb for the week, guys, is about 113.75. So let's go have a look, guys. Can we find any premium below 113.75? More specifically, closer to our support zone, which starts at 111, 110. That's really where I want to be. So let's jump into Airbnb real quick. And as you can see here, guys, in terms of Airbnb, well, as of right now, there is not even enough premium at the 113s. At these 113s, you'd want to see about, let's call it about 55, 60 cents in premium. They're almost there, but not quite. So what we need to see on Airbnb over Monday or Tuesday, we need to have a little bit of a dip on this company, right? If we can come down into the expected move, think maybe in the 115s, 114s Monday or Tuesday, that will probably free up, guys, even better strikes. Think the 112s all the way down to 110s. And obviously, if for some reason Airbnb has very bad days on Monday or Tuesday, think, let's say, minus 3-4% days, because Airbnb can move like that sometimes. Let's say they come down 3-4% already into the 112s, 111s. Well, then we need to adjust, guys, as well, and go for pretty much lower than that, 110, 108s, right? The trick of this strategy is adjusting depending on the price movements on the Monday or Tuesday session. We want to be going as low as possible on this options chain while still getting compensated for our money and time by getting 0.5% of that strike price. So hopefully that makes sense on Airbnb. Now, the next trade, guys, is going to be a 2-part trade. I have one that's a little bit more risky in the name of AMD. Why is it risky this week, guys? Well, because of the exposure that it has in connection with NVDA, quite simply, right? The reason I give it is because I love these lower levels on AMD, so I really do want to play this stock, but there are some risks involved because it is closely tied to NVIDIA's performance, so just keep that in mind. If you do not want to take this one because of that possible exposure to NVIDIA's price movements, then definitely, guys, it's not financial advice anyways, right? Just giving you guys trade setups and ideas. So the expected move on AMD for this week is going to be 147.02, but because we know there's heightened risk due to NVIDIA, I want to be getting lower, guys. I want to be all the way down here, 143 to about 140. That is where I want to be, significantly lower than the expected move. Let's go find right away if if we can find some premium on this. And this options chain this week is going to be a little bit more pricey because of how it's connected to NVIDIA. So as you can see, guys, there is a lot of premium below the expected move, right? Expected move is 147. If we look at the 147s, you will see that there is a ton of premium there, almost 1%. But be very careful, right? In the event, this is how Wall Street tries to lure you in to the trade by offering you attractive premium at the expected move. But know why they are doing that. They're doing that because of this guy right here. So keep that in mind. That's why we need to go a little bit lower than the expected move if we want to take this trade in the safest way possible. As you can see, there's currently nice premium at the 143s, getting just about 0.5%. I want to be going slightly lower than that. So in the event AMD has a little bit of a pullback here leading into NVIDIA earnings, right? Let's say we can get a pullback down to the 152s, 151s, 150s. That will free up some premium in my desired range, possibly 141 down to 139. We want to be going as low as possible while still getting compensated with 0.5%. So keep that in mind. That is how I'm going to be playing AMD for this week coming up. Now, the second portion of the trade, if in the event you don't like that one because it's too risky, is Microsoft. And this one is not necessarily for a short put play, because to write a short put on Microsoft, guys, you would need roughly approximately $40,000. And I completely understand not many people have that available. And even myself, I am very rarely playing short puts on Microsoft, right? But there is a trade that is possibly open for us. And that trade is going to be put credit spreads, weekly put credit spreads. So the expected move on Microsoft is down here at about 408.20. When we do weekly put credit spreads, we always want to be going 2 times the expected move. So if this expected move is about 2%, we want to be going about 4+%, 4.5%, which would put us pretty much at the roughly $395 range, right? So let's go have a look on Microsoft. Can we build a put credit spread on Microsoft in that lower 395 range? Well, let's go have a look here, guys. And you'll see I checked them before. The ROI is actually quite decent, coupled with the fact that this is a very strong area of support for Microsoft, and it's one of the most solid companies in the game. That's why I don't mind writing put credit spreads on them. So if you can see right here, guys, we have a couple strikes, right? I want to bring your attention to the 392s versus the 387.50s. That is well beyond 2 standard deviations of the expected move. And as you can see, the difference in the strikes, if we sell the 392.50s and buy these 387s, we get a net credit of roughly $10. Now, you may think $10 is very light, but keep in mind, it's all about the amount that you're earning in relation to exposure. If we're earning $10 and the exposure is 500, we are making 2% for the week. That is very good ROI. And obviously you can scale up depending on the size of your accounts for how many contracts you actually choose to write, right? So I would be keen on writing these. If you're a little bit more aggressive, you can always go with the 395s versus the 390s. They provide about 12 cents, so that's just a couple ideas for put credit spreads on Microsoft. They are well below the expected move, and they're really at the bottom end of this large area of support. So the risk, in my humble opinion, is quite small for this trade. Just an idea for all of you guys out there that like some weekly put credit spreads. Now, moving on further, guys, the 5th stock in our top 5 options plays is going to be Charles Schwab. So this one, again, guys, I'm playing very conservative companies, right? This is one in the financials industry, of course. I like Charles Schwab because we are in a very large area of prior support, which is pretty much the $64 down to roughly $60. You can see it's been a support range for roughly the past 2 years. Now, obviously, it's come below here, but right now we are looking at this area, to act as support once more. So I do not mind playing this stock at all. Now, the expected move for Charles Schwab is about 62.76 to the downside. So let us see, guys, can we find some premium below 62.76? Let's have a look together, shall we? So moving on into it. So 62.76 would be roughly, we need to target the 63s or below, right? So near the expected move at the 63s, we do have the required premium, right? 32 cents. That's roughly 0.5% from 63s. However, we want to be going a little bit lower, guys, right? We want to be trying to target maybe the $62, $61, which is the bottom end of this range. So in the event we have a little bit of pullback on Charles Schwab here, guys, into the early portion of the week, Monday or Tuesday, keep an eye on it. If we pull back into the 63s, maybe even low 63s or high 62s, that is definitely going to free up some premium, not only on the 61s, but maybe even on the 60s. So I like these 3 strikes, guys. 62 down to $60 decent value, could have decent ROI in the event of a pullback as well. If you're a little bit of a more aggressive bull on financials, the 63s are open a bit right now. I'd be a little bit cautious, however, guys. So 62 down to 60 is my preferred target range for Charles Schwab. So I'll keep a very close eye on this one because it's very, very close to being within our target range right now, right? So that's pretty much all of the top 5 options plays for this week. Now, obviously, you guys know I always have a bunch of bonus plays for you, right? So let's take a look at some of the bonus plays, guys. And there are very, very, very many bonus plays that are possibly going to be open to us in the near term future, right? So the ones I keep on the back burner because they're not quite ready just yet, but I always keep an eye on them. Palantir. So let's say Palantir is a little bit of a pullback here, guys. I want to be looking for short puts in the $29 to $28 level. Extremely good area of prior huge resistance. We broke out, possibly a retest of weekly support. If this pullbacks here in the next 1 to 2 weeks, I will be looking for some short put plays here on Palantir. Beautiful company, but I do not want to chase it up here, looking for that retest of prior huge support, right? Now, company number 2 is going to be UPS. So UPS, I love this base of support that UPS is forming down here. Take a look at the longer time frames, guys. This is monthly support. This was monthly resistance stemming all the way back from 17, 18, and 2019. And now we are back testing it for the first time as a huge level of support. This green line right here, guys, is the 200-month moving average. It takes a millennia to establish this line. And as you can see, we're pulling down into it. Now, 125 down to about 123 is my desired location. In the event we pull back into this location, right, that is what I'm going to be looking for. But we need to get fairly close. I'll be looking for a big red day on UPS. Think maybe 2-3% to the downside. It doesn't often do that, but if it does wick down into this location, I'll be shopping for some puts. Short puts rather, 125 down to 123. So keep that on the back burner, right? Now, the other play that we're going to be looking at here, guys, is Micron. Micron, I've been playing this one a decent amount in the past couple of weeks. Love this support zone right down here, guys. 97 down to about 90. I want to be mid-90s or lower. So think 94 down to about $91. I love this, guys. Was huge area of prior all-time high resistance. We are now back testing it again as support. So I would not mind playing Micron down here. Decent value and a decent area of technical support as well. Another company we're going to keep an eye on here, guys, is going to be Oracle. So Oracle now is pulled significantly away from our desired area, 127, but they do have their earnings coming up in just a few short weeks. In the event we have a pullback leading into those earnings and after earnings, I want you guys to keep this one on the back burner, guys. In the event we start retesting lower areas, 130 down to 125. Love Oracle down here in this lower location, but since it's not quite ready yet, that's why we keep it on the back burner, right? Now, the other trade we're going to be looking at, guys, is Elf Beauty. So Elf Beauty bouncing beautifully from our area of support that we had labeled on the chart. So in the event we'd have some further drawdown on Elf Beauty, think bringing us back down into the mid 155s, I will be looking at short puts, guys, below 150. 150 down to about 140. That's what I'm going to be keeping an eye out on for Elf Beauty specifically. Now, we do have a couple other plays as well. ON Semiconductor, I love this play too. In the event they get affected by NVIDIA earnings after the Wednesday session and pull back down into this area, guys, think 71 down to about 68. Love this area, has been building a base of support in this range, guys, for the last 2 years. A very solid area. So I like it in the mid to high $60 level in the event we get a retest down there. That's another trade that we're looking at. Amazon, of course, guys, not on the weekly top 5 because it's not quite ready yet. I need Amazon to pull back a little bit more towards the 200 daily moving average right here. 170 down to 165 is my desired location for short puts on Amazon. So it's almost ready, guys, but not quite, right? So that is just another one that I keep on the back burner real quick. Another one that I'll be looking at, guys, this is a Chinese stock, a little bit more risky. The Google of China, Baidu. I love Baidu in this lower location, guys. This has been support since 2013. The fundamentals of the company have never been better. It's just the China trade is just out of favor right now. It's not the company's fault. Companies is growing very, very well, but just not a very popular trade right now. That being said, short puts in this lower $80 range, high 70s is excessively good value for the company. We went over their fundamentals in the last week, guys. These fundamentals, the PEG ratio is amazing. The free cash flow yield is amazing. No debt problems at all. The company is doing beautifully. So I love writing the company down here. Would not mind being assigned at all. Another company that I keep on the watch list all the time, guys, is Enphase. We know the solar sector has been extremely out of favor as of recently, but you all see Enphase has been building a great base of support down here from about 120 down to roughly 100. So every single time we pull down hard into the mid 100 area, it frees up short puts below 95 down to 90 on a sharp pullback. That's a trade that I like taking. I've been taking this trade several times here, guys, over the course of the week or over the course of the year, and I have not been assigned one single time. Another one that's interesting too is Disney finally bouncing off a beautiful base of support. This lower area right here, right? 85 down to about $80. I love playing Disney short puts when they open up in this location down here, but the stock doesn't move very much, right? So we really need to wait for a move coming down into this mid 80s location to try and play the mid to low 80s section right down there. I like the company. Disney obviously has its problems, right? But when we're targeting a lower base of support, that is literally at this point, guys, this base of support at this point in time, right, is for all intents and purposes 10 years old. So I do not mind bidding this company down in these lower locations. And the other one we're going to be looking at, guys, is CLH, right? So CLH is one that obviously growth story, which has come under a bit of a magnet, or not a magnifying glass recently, right? Because of their growth slowing down. No, it's not slowing down to negative. They're just growing from, they were growing over 75% a year, and now it's come down to about 40%, right? So still insane growth, but you guys know how Wall Street responds to slowdown in demand and growth, especially for consumer discretionary companies in this economy right now. That being said, this area right here for CLH represents very good value in my opinion, and this is pretty much 36 down to about $31. I would not mind writing short puts in this area if we start pulling further and further into this large area of support, which was established over the last couple of years of trading. And the valuation under 42 down here is quite good for such a high growth company. Weekly time frame is almost oversold, and the daily time frame has been oscillating between oversold as well. So those are just a few of the bonus trades that I always keep on the back burner, guys, right? All right, now in terms of the last thing that we can cover is going to be some strategies for playing NVIDIA earnings. Now, of course, playing earnings is extremely volatile, guys, and is a very easy recipe to lose all of your money if you are wrong and the market moves in the wrong direction. I never advise anybody to play earnings, but for all of you who are interested in playing it and want to know how I play it, here is the strategies that I will most likely employ. So first things first, guys, to open these options, what I like to do is wait for 1 hour before the close on the day of earnings. That is simply because NVIDIA earnings are on the Wednesday session, as everybody knows, after the close, and Monday or Tuesday, the stock could move substantially in either direction. So the reason we do it 1 hour before the close on Wednesday, guys, is so we can have the most accurate expected move pricing as possible. So let's say for all intents and purposes, we were right now Wednesday, 1 hour before the close, and this was the price, and this was the expected move. The expected move is about 10% up or down. So keep in mind, if we are going to be doing strategy number one here, which is selling puts into earnings. So the expected move is 10.2%. When I sell puts on earnings, guys, I always look for 2 standard deviations from the expected move. So think 2 times this move. So I will be writing puts at a 20% expected move to the downside, right? So if the expected move here is about $13 up or down, I will be going $26 below the current share price, which right now would be about 103 all the way down to about $100 in strikes. And let's go see if we can find any premium on NVIDIA down there for the week. And as you can see, we can because of the volatility, right? You can see there is premium available at the 103 down to about 100. I would be willing to take either of these strikes, guys. 103 pretty much down to about $98 would be my comfort range. Why? Because that is literally in the massive area of support and respects our 2 standard deviation from the expected move rule for earnings. But just keep in mind, this can go either way, of course. It's just a safer way of playing earnings as a whole. Now, The second way that we can play this is if ever you have a bullish lean and you are expecting a move to the upside, but maybe you just want to do it for a little bit cheaper, right? Because as we know, on the week of earnings, guys, call options, whether you're in the money or even out of the money, they can be sometimes very expensive, right? These $135 calls, even though they're not too far away from the current price, guys, they are almost $500 each. And if you're wrong and it moves down, unfortunately, that is a big loss to absorb, right? For anybody, pretty much. $500 is a lot of money. Let's be real, right? So if you want to play this for cheaper, the way that I usually play this, guys, is I go for call debit spreads because they're a very easy way, guys, to not get burned by implied volatility crush, but also don't have the loss profile that just regular call options do. So what I technically want to do, guys, is I want to put my short leg of the call debit spreads right there. I want to put it right at the expected move or slightly under. So for this week specifically, let's say this was the pricing available before the close, I would be looking for possibly the 135 versus the 140 call debit spread. So take a look right here, guys. The 135s right now are about trading at $4.75, 475 bucks, and the 140s, to sell these 140s against the 135s right here, they bring in about $3.20 in premium, right? So the net debit would be about $155 per contract, a much more manageable cost of entry. And in the event that NVIDIA goes above the expected move, above that 142 or even above our 140 strike right here, right, we will be able to make probably close to, if not above, a 2x per contract. So that's what we're looking for. And at least we're not risking too much. And if ever the stock moves down, at least there will be a little bit of recapture value on our contracts. So that's why I tend to prefer doing call debit spreads leading into earnings. Yes, the reward is possibly limited to the upside, true, but obviously you don't have as much downside risk. There's obviously always a trade-off. So those two strategies are the more safe quote unquote strategies that I would employ for company earnings that are as large as something like an NVIDIA, right? So hopefully that's helpful to all of you that are wondering how I play NVIDIA. Not only NVIDIA, but this also applies to many, many, many other companies' earnings out there in which you want to either take a short put play or possibly a directional play to the upside. Obviously, if your strategy is leaning bearish into NVIDIA earnings, then you just want to do put debit spreads pretty much with the exact same rules, right? So that's pretty much everything for that section. So that was pretty much everything for today's video. If you are interested, guys, in seeing me taking these trades in real time, keep in mind, I have just recently launched the Discord service. It is a private Discord group where I share all of my insights into trading, all of my live trades, and all of the trade setups, as well as all of those bonus plays, right? All of the high conviction trade setups, what I'm looking for, and then when I enter into trade, those are all available. So if you are interested in joining the Discord with us, guys, there is quite a few members in here right now with us so far. Right? Very, very nice community that we're building right now. If you are interested, I will leave the link down below in the description, of course, for you to join. If you have any questions at all, please feel free to leave them down below in the comments. That's been pretty much everything, guys, for today's video. If you appreciated it, consider dropping a like on the video. Would love to have the channel grow a little bit more. And obviously, if you haven't subscribed yet, consider subscribing to the channel too. Would love to see you back in a future video like this. And lastly, if you have any questions at all on the strategy, types of contracts we write, anything pertaining to the strategy or maybe plays that you feel that would be good candidates, but maybe you want some sort of a second opinion, feel free to leave it down below in the comments, guys. And I'm there to answer you, usually within the first 24 hours. So take care, guys. Happy week of trading. I will see you in the Monday to Friday post-market recap videos. Have a great rest of your weekend and peace.